Good morning, traders. This is Perry Wilkie with StartupTrading.com. It is 9 a.m. Eastern Time on Monday, December 8th. So, looking back at Friday's action, right, um, we had a little bit of a small overnight range, right? Not a lot going on for either of the indexes compared to some of the stuff that we've seen of late. But then after the bell, right, we just kind of we tested up higher, had that little probe. But really, if you look at the shape of the distribution, it was just another balanced day, basically. If you cut off the top there, and it just went back to its happy place, more than easier to say, right? So the morning time for us day traders was between basically, you know, the opening bell to about 11:30, the euro close. That was the main crux of the movement. If you look at after that, right, we just for the bell to bell session, right, the halfway back short was the lid. Not that it was going anywhere after that, but that was definite resistance going, uh, for the rest of the day. Excuse me. So as we kind of, look at where the Qs are still, they were hugging around that 625 area on Friday. The SPY was still basically we had a lot of positions between 680 and 690 on the SPY last week, with 685 as a flip. So we spent a couple days under the 685, and then Friday we basically spent over 685. Really not, a lot going on there. And then as we look at where we are, right, you can see that drift up. Uh, but really, the last 3 or 4 days, we're just trying to hold above this 68, 62, right? So that should be the lower end still until proven otherwise. Going into FOMC, maybe we'll get a little bit more of a shakeout at some point in time, but until proven otherwise, you have to assume that 68, 62 is the bottom, and probably just under 69.39 would be the top there. And then really looking at positioning going into today, uh, the the cash market closed at 68.70 on Friday. We're up 12 points, so we'd be around 68.80 at this point in time. And you can see 6,900 has some gamma, but not a lot. And if we go down and look at the bottom of the sheet where, all of the positions are kind of summed together, you can see that 6,900 isn't, it's kind of dwarfed by that 7,000. And I've talked about this before that until the end of the year, most of these options expire on December 31st. So that's going to be your magnet or resistance going into the end of the year, or target if you want to say for a test. But we'll see. I would assume this is going to trade at least once, but you can't really, as day traders, place bets on that now. And then I would assume that we get over it for a little bit, and then we'll, see if it's held or lost. But that's right where that JPM collar is. That's going on into the end of the year. So there's really not a lot to see on the cash market. But if you look at the SPY closed at 685.70 basically on Friday. We're currently trading 687 right now. So again, it's not as dramatic as it was last week, but for the week, right, you can see that still from 680 to 685, that's a zone, and then from 685, it's really up to 688 now with 90 being kind of a sticking point, right? You're going to have to work to get over 90. But for today, someone has sold 696. If we're really going to explode to the upside and do something, that would be where you were going. That would be, since we're currently trading 687, that would be 90 points higher than we're currently trading right now on the ES. That is within range for a day trade, right? That's not out of the question. You have to assume that it's probably not going to happen. But if we do get up there for some reason or the other, I would not chase any longs above that. I would not be looking for any magical numbers above that 696 for today. And then if we do cross over 690, uh, it should be support until proven otherwise, and maybe back down to 688. So you got a 20-point range there. So let's check out the Qs. The Qs closed at 625.50 basically on Friday. Uh, and you can see from 625 to 630, there's just a block of calls, all with about the same value of about 56, 5500 sitting in there. Uh, and then you got 630, right? So that's going to be your block. And then for the week, you can see you got a little gamma at 630, you got a little bit more gamma at 635, and you got even more at 640. So for the week, currently 640 would be your upside lid, and maybe we'll get a test of that on Wednesday, uh, and then we'll have to see if it holds or not. If we can, stay up in these bounds. So think about these as blocks until proven otherwise, right? And cut them in the middle like that 627 half, 632 half, 637 half. Are you above that midpoint or below it? If you're above the midpoint, you should be, biased towards going to the next large gamma. Uh, so for today, I'm just gonna see if we can, again, we're trading 628 basically right now. Um, do we get that test of 630? And then do we get a kick back down towards 627 half, which would be, about 20 points under where we're currently trading. And again, for today as day traders, 635 should be your top upside. Even if it goes past there, it's just not worth uh, chasing that for a day for us day traders. That would be about $7 on the Qs higher than we are, or about another 280 points uh, on the NQ. So the NQ is currently trading 820. So, you would be looking at basically 26,100 or around that area, potentially as the lid. I'll throw out those numbers, but my math doesn't sound like it's that good anyways right now. But, add 280 to where we're currently trading, and you know, that's around where that lid should be as the most extreme positive case that you can get. So normally on the Fed day, going into the Fed, there's what you can research this, if you ever get bored, but there's some white papers that have been written on the Fed drift. And basically, what happens is any pop in the VIX, because the main catalyst for the week is right Wednesday afternoon at 2 o'clock. So traders know uh, that maybe the last few minutes leading up to that they can get a little bit more nervous or punchy, but basically they know that the major risk doesn't start until that firing gun goes off at 2 o'clock on Wednesday. So what are they going to do between now and Wednesday? Anytime that there's a pop in the VIX, they're just going to sell it, right? So when they sell that pop in the VIX, the markets are going to not go down anymore for sure. They don't have to go up, but they're not going to go down anymore. So there's usually a slight floor to the equities going into the Monday and Tuesday going into FOMC uh, with a slight upward bias, not a major upward bias, but don't fall over yourselves to the downside more than like, if you get a 2 cycle down move, uh, that lasts for 2 cycles, which would be, a little bit more than an hour, that's probably all you would get at any point in time between the bells heading into Wednesday afternoon. I hope this helps. We'll see what Jack's looking at next. I'm kind of interested to see what he's looking at today. And then again, watch those points of control for the ES. Even if you play the NQ, be aware of those are your major markers. Um, 68.62, 68.80, and 69.39. Those are your main uh, supports and resistance, high volume nodes that we have left near term. I don't think there's any chance that we can touch 67.81 going before FOMC. We could test that after FOMC later this week or next week, but I don't see it happening this week. You guys have a great day, and I'll talk to you tomorrow.